So a very, very good morning, traders. This is Aaron Hill from FP Markets with the market outlook for the 13th of September. Right, last week was an interesting one. As I referred to in my weekly market outlook, the European Central Bank announced a slowing in its pandemic emergency purchase program, PEP, to a moderately lower pace in Q4. Which, as I said, was the scoop of the week. ECB President Christine Lagarde underlined that the bank is calibrating the pace of their purchases, quoting favorable financing conditions, and in addition to inflation numbers. You may recall we closed out August year on year. As we closed out August, year-on-year CPI was 3% over a 2.2% prior and a 2.7% economist forecast. Of course, Wall Street is another key mention for last week. Major US equity indexes exhibited a clear risk-averse tone and finished lower across the board. The Dow slipped 2.2%, with the S&P 500 tailing by minus 1.7%. Equities have, as most are likely aware, have been on the back foot since the US jobs report was released on the 3rd of September, which, as we all know, the headline considerably missed expectations. Concerns surrounding the pandemic may, in my opinion, continue to hamper economic growth, while inflation could also prompt the Fed to, shall we say, step up. With that in mind, let me just quickly move to the S&P 500 chart. So from a technical perspective, I found this very interesting. Many dip buyers this week are likely watching the 50-day simple moving average as a potential support platform, which has delivered support since the end of January. This dynamic support currently circles 4,424. Yes, so do keep an eye on that this week. With that, where are we in early London? As you can see, US equity futures trade with reasonably solid gains. You know, clearly nursing some of the last week's losses, in which the S&P 500 had its worst weekly performance since, I believe it was mid-June. European equity indexes, in a similar fashion, also trade on the front foot this morning. The FTSE 100 is up 0.5%, the DAX 30 0.7%, and the CAC 40 at 0.5% higher. Also similarly, Asian equity indexes closed higher. The Nikkei 225 0.2%, and the the ASX 200 0.3%. Now on to currencies. The safe havens are taking a bit of a hit this morning. Japanese yen and Swiss franc. As you can see, the Swiss franc is lower across the board right now. With risk currencies, I believe risk currencies are largely higher across the board. The Australian dollar and New Zealand dollar are both considerably higher. The Aussie dollar currently trades at 73.61, at spot 10% higher, and the New Zealand dollar against the US dollar trades at 71.18, and is, you know, it's almost unchanged at the moment, to be honest. So look, this makes sense in terms of the where we are in the equity space currently. Another key mention, of course, is the CAD. That's higher across the board, and I believe that's bolstered by the WTI prices this morning, currently up spot 7%. Look, in terms of euro and pound, we are largely lower, I would say, with the euro dollar trading lower by at 17.85, and that's down by spot 30%. We also have the British pound against the US dollar. That's down spot 2%, excuse me, at 38.15. Now, swiftly moving on to economic news. to be mindful of early week. We have very little on Monday, so very light economic calendar. On Tuesday, however, we have the US CPI numbers out. This is likely to be closely watched. It will be at this point we'll see how much of the heightened costs are being passed on to consumers. Although unfortunately unavailable on the Reuters program, I know that the Economist forecast expect the reading to show that consumer prices for the I'm just trying to find it, for the year-on-year, they expect it to have jumped 5.3% on an annual pace in August, while the month-on-month CPI is expected at 0.4%. Moving further into the week, on Wednesday, we have the UK CPI on a year-on-year basis. Let me just find that. Yep, UK CPI year-on-year basis. And as we head lower into the calendar on Wednesday, we also have the Canadian CPI month-on-month figures. Okay, on to Thursday. Of course, we kick off the session with Australian employment change and unemployment rate, and later on that day we have the Philly Fed Business Index, followed by retail sales and core retail sales for the month-on-month. And Friday, you know, we have a relatively light calendar for once. With only, I believe, we have, yes, the UK retail sales month-on-month really on the radar. Now, for anyone who reads my daily market analysis, they will recall the following four charts. Now, as you can see on the euro dollar, we have recently reacted off of a, let me just zoom out of there, Quasimodo resistance turn support on the H1 time frame. This comes in at 1775 and lines up with the prime support on the H4 time frame at 1764, 1776. Now, why did I label this prime support and why did I highlight these areas? This was simply because of this demand above here. It built somewhat of a trust in the market, especially with as you can see, buyers come in here. This would have encouraged additional buyers to join the flow, should you say, and their stops would have been placed below here. Excuse me, stops would have been placed below here. Now, the sell stops below here would have also, have fueled bids off of this prime support, which, as I said, aligns with this Quasimodo resistance turn support on the H1. And as you can see, we have reacted to the PIP. Yes, so do keep an eye on that as we go forward. Now, onto the Aussie dollar. We're not really seeing much not really seeing much action. We remain at this H1 demand area at 73.31, 73.50. I did highlight this prime support at 73.10, 73.22, and I'm expecting, I'm watching this prime support if we break this demand, because there will be a lot of sell stops below this area here. Also, just to add, there is a decision point at 73.07, 73.24 to take into consideration. That encloses that prime support. Other than this, on the higher time frames on the Aussie dollar, the daily time frame has a prime support at 72.86, 73.55. Currently in play. This followed the almost one-sided reaction from prime resistance at 75.06, 74.74. Swiftly moving on to the dollar yen, we have a similar scenario, which was highlighted in my market weekly technical market analysis. Now, we have strongly broken the round number. This was anticipated to the upside, but we expected more of a bearish reaction to form from these prime resistances. This is a bit of a concern that I would have expected price to have almost immediately come back to retest the 110 level from here. Nevertheless, this was an anticipated stop run or fake out above the round number into these prime resistances. Now, swiftly moving on to the to the pound dollar. A very similar scenario to the euro dollar. We purely from a short-term perspective, we formed a high at, I believe it was 38.88 on Friday. Now, the low prior to forming this high came in around 38.36, I believe. I might be wrong there. 38.32, excuse me. And below this low, there would have been break-even stops at this point here for those who entered long on the retracement, and there would have also been stops below here for those that entered late, maybe on the breakout above here. With that, there'll also be breakout sellers below this area if or when we broke below here. As you can see, we have broke strongly below this level, and we drove straight into this prime support, which was highlighted in my technical market insight for the week at 38.03, 38.19. What's interesting is price has actually bounced from the, I don't like to say Fibonacci cluster because it includes the 50% retracement, which is not a Fibonacci number. But anyway, this is a Fibonacci cluster, and it has the 61.8% at 38.04. And as you can see, we seem to have bounced from these levels within the prime support, as I said, at 38.03, 38.19. Now, in terms of targets, we're looking at around 30, as I said in the analysis, 38.13. So we're looking for a move to 38.13 from here. Anywhere above that would be good, of course, and this would also place any selling from the prime resistance at 39.40, 38.88 on the H4 under pressure. Yes, so that's really all I have from me today, traders. Thank you for watching, and have a productive day.